Hello everyone, in this video we're going to cover what most consider the most daunting part of the funds raising process, investor due diligence. If you don't know what investor due diligence is, simply put, it's when an investor basically looks into your company and all the claims that you've made to see if they're interested in purchasing it, to make sure that you have told the truth and make sure that what they are purchasing is exactly what they think they are purchasing or investing in. I'm going to walk you through exactly what I've been asked for in the past in my personal fundraising experiences, and also what I would expect to see if I was investing in your organization today. With a background in both having to go out and raise funds for my past startups, and now as an investor that looks at investments as they come up, I'm going to tell you exactly what investors are going to ask you for and what you should probably have ready in advance for when they ask. Before we get started, if you have not checked out my video before this one talking about how to create the perfect pitch deck to get investors' attention, you should definitely check that out. I'm going to put a link at the end of this video, and it's definitely a good preface to this conversation. Last thing before we jump in, if you like content like this, please subscribe so you don't miss videos like this in the future. Also, if you have any questions about the content in this video or questions about what I'm covering, please ask in the comments below. I've always really enjoyed helping founders through this process and would love to hear from you. All right, let's jump in. So where do we start first? I'm going to start off with a warning. And the warning is simply, this is going to seem like a lot and it may come off as overwhelming. But if you are serious about raising funds, most of what I'm going to cover following this is going to be required. It can be a lot of work if you don't have it done already. So I generally suggest if you're serious about raising funds now or in the future, you generally want to start on this early. In fact, for most companies that I work with, that I'm helping raise funds for, we will generally work on all of this, or at least the bulk of it, before we ever talk to our first investor so that we can have it ready in advance. I find it as a vote of confidence to the investor or whoever's looking at your company to be able to sit across the table and tell them that you have what they're looking for when they ask for it, rather than having to tell them, unsure, you need a couple weeks to put it together, we'll get back to you. So start this kind of thing early if you're serious about raising funds. So there you have it. You've been warned. Don't freak out. What we're going to cover is very manageable if you are serious. Similar to my last video, I'm going to break this down into 10 sections or categories. All right, here's the first category. It's general and corporate. So firstly, you're going to want to make sure that you have a general overview of your company prepared that includes a timeline, a history, and any sort of milestones. I'm going to guess you probably already have this done, but just in case you don't, you're absolutely going to want to prepare it in advance. It should be included in your pitch deck already, but be prepared. You're also going to want to have a detailed overview of each of your products and each of your services, inclusive of pricing. So all of your products listed out with the price and a description, detailed, and all of your services, prices, description in detail. You should also, when you're breaking this out, include the number of clients or sales that you have for each of these. So again, service, price, detail, and the number of clients that you have using that service, or the same for products. You're also going to want to make sure that you have it listed out any sort of growth opportunities that you're thinking about. And when I say growth opportunities that you're thinking about, what I really mean is if you're considering launching new products or services, or even expanding on existing products or services, make sure that you have some sort of sheet outlining what you're thinking about and what the potential blue sky is to the company if these get rolled out. Ideal client profile, or ICP, is also going to be asked for. This is going to be a general theme, but I'm going to call it out every time as we go through these. The ICP, or the ideal client profile, should have already been included in your original pitch deck, but just in case it's not, definitely make sure you have it listed out kind of a one slide, one sheet detailed on who your ideal client profile is, so the investor knows who exactly we're talking to in respect to marketing efforts and sales efforts. You're going to want to make sure that you have a complete understanding of your competitive landscape because you will be asked about it. You'll be asked to include your strengths and your weaknesses in comparison to each competitor and a direct comparison of your products or services on a feature level. I would recommend picking 3 to 5 of your biggest competitors, listing out all your products or services, doing a direct comparison, and then outlining the strengths and the weaknesses of each of those competitors so that the investor can understand where you lie in the market and where the competitive advantages lie. From more of a corporate standpoint, expect to be asked for all of the documentations on the business itself, articles of incorporation for the primary company and any subsidiaries if there are any. Lastly, shareholder agreements of any kind, inclusive of stock option agreements, and I would include the cap table too. You're definitely going to be asked for those things so that the investor has a complete understanding of the ownership of the company itself. Okay, category number 2, financials and taxes. We'll start with the easy one, taxes. You are going to be asked to include or provide all income tax returns for, at a bare minimum, the last 3 years. You're also going to be asked to include payroll tax returns too. The investors are going to want to have a complete picture of tax obligations of the company and the trends of these taxes over the last 3 years. In the event that there are any tax audits or outstanding tax returns, this needs to be included too. I would also expect that you are going to be asked for, in the event that you have an audit or an outstanding tax return, any sort of correspondence that's occurring with your accountants or your CPA on this issue so that the investor can be up to speed on where exactly you are at with these tax returns. During this whole process, what an investor is really looking to confirm is that any claims that you have made and their general understanding of the company is supported via data. So this is not a time, due diligence is not a time for opinion, rhetoric, or gut feel. If a statement has been made, they are going to ask you to back it up with data or reports to make sure that it is in fact true. So expect to support all your claims with data. And as a second side note, as a default, anytime I mention needing anything in the form of a report or documentation related, assume it's for a period of 3 years. If you don't have that paperwork or reports for that long, maybe your business is only 2 years old, that's fine. Otherwise, expect it for at least 3 years or as long as you can provide it. For the needed financials, you are going to need to supply 3 years of basic financials. When I say basic financials, what I'm talking about is a profit and loss and a balance sheet. So profit and loss and a balance sheet for 3 years. Feel free to include things like estimated projections and budgets for the next 12 months as well. As you see the business trending, investors going to be very interested in that, and I will be very surprised if they don't ask you for that in advance. Clear picture of aging receivables and aging payables. So if there is a bulk of money out there that has not been paid to the company yet, you're going to be asked for details on that, inclusive of any process that you have for collecting it. And it goes the same for payables. If you have any outstanding bills, they're going to want to understand what the bulk of that is and why they have not been paid yet. So be prepared for those types of questions. When it comes to calculating EBITDA, if you are doing an adjusted EBITDA, expect to include details on any add backs that you've used to calculate that adjusted EBITDA. An example might be maybe you have a large one-time legal expense that is outside of your regular operating cost. You are going to want to include these things. Most likely, an investor is going to add these back in, recalculate the EBITDA, and see what it looks like unadjusted. Any financial KPIs that you use to track progress in your business that is, again, specifically finance related, you should proactively put those together, clean them up. Again, make sure that they're at least 3 years. If you don't have them, that's fine, but expected to be asked for 3 years worth of KPIs that you follow to measure how your business is doing. Lastly, and most importantly in the finance category, any reports that you have regarding revenue. And when I say any reports, what I mean, any way that you track and report on revenue should be supplied. So some examples might include revenue trends from MRR or ARR, monthly recurring revenue, or annual recurring revenue, revenue broken out by individual product or service so that we understand where the revenue sits in respect to your product stack, revenue by new to file client, existing clients, upgrades and renewals. We'd really like to see where the revenue lies in those 4 buckets on any given month, month over month, so we understand where the revenue lives. Revenue by channel. So if you have a partner channel, an affiliate channel, direct sales, where's the revenue coming from? Help us better understand how the revenue is coming into the business. And then a last example would be maybe recurring revenue versus non-recurring revenue. Maybe you have a recurring service, but also offer one-time purchases. Where does the revenue live? What is the breakup of that month over month? Bottom line, any way that you can report on how you slice and dice the revenue to better understand the business, an investor is going to want to see. And don't worry about telling your story with the data. Most investors are going to have their own suite of analysts to slice and dice the data. Just make sure that you have the data and can provide the data for a 3-year period. They will likely want to see it their own way anyways. So those are the largest 2 categories. The remainder of their categories are actually a lot shorter, a little easier. For example, category number 3 is contracts. This one's pretty easy. Investors are going to want to see any commitments you have made via any sort of contract that you have put pen to paper for, or of course, digital signature. And this includes both the revenue and the expense side of the business. For the revenue side of the business, think things like customer contracts, channel partner agreements, joint venture agreements, etc. Anything, any sort of agreement that has been signed that will affect revenue, they're going to want to see a copy of in the data room so that they have it on file. On the expense side of the business, I want you to think things like vendors, contractors, sales commission contracts with your sales team, or any other sort of commitment that you have made via contract that is a recurring expense that you have committed the company to. So any sort of contract that you have put pen to paper on, they're going to want to see collected and put in the data room for their review. Category number 4, insurance. This category is also pretty easy. Investors are going to want to see all things historical, current, past, present, and future in respect to both insurance policies and any costs associated with them. In the event that there are any pending claims, you're also going to want to outline these here too so that there are no surprises. But generally, anything past, present, or future, cost related or claim related regarding insurance, past 3 years, you're going to want to make sure that you have all documentation outlining everything there ready to go. Category number 5, debt. Outlining debt in any form, in any way borrowed, is going to be critical for the investor to truly understand the financial health of the organization, and any investor is going to want to see this in detail. So think loans, money borrowed of any kind, inclusive of friends and families to get the business started, leases, credit cards, credit lines, any sort of borrowed money at all. You're going to want to make sure that you have this detailed outline, and you're going to want to make sure that you've got all the agreements, account statements, paperwork for each of these all collected and ready to go. Lastly, if the loans are guaranteed in any way, shape, or form, you will want to outline any of the assets named to back those loans so the investors know exactly what's at stake if the loans are defaulted on. Category number 6 is legal. You are going to be asked to disclose any sort of litigation, past, present, or future in the form of any sort of threats against litigation, inclusive of any sort of investigation, or if you're sitting in any sort of arbitration, anything to do with the possibility of litigation, past, present, and future, you are going to be asked to disclose. In the event of anything is already in progress, start thinking about collecting any of the paperwork regarding court orders, judgments, awards, settlements, etc. Make sure you've got all of your ducks in a row. Make sure you've got all your paperwork ready to talk about those things. You're really going to want to over communicate in this area if you have had any sort of legal issues, past, present, or potentially in the future. So over communicate when it comes to any sort of litigation. Category number 7 is intellectual property and technology. The technology portion is pretty straightforward, and you've likely already covered this in your pitch deck. I'm going to call it out again. If you have not checked out my video on how to create the perfect pitch deck to get your investors' attention, please check out that video. I'm going to put the link at the very end of this video. But again, you probably already have your tech stack listed in that pitch deck, or at least you should. But if you don't, you're going to want to put a snapshot of your tech stack together, all the tech that is used to operate your business. Make sure that that is all put together on one piece of paper so that the investor understands what technology that your company is being built off. This is really important to investors for a few reasons. They want to understand the cost. Second thing, they want to understand how easy it would be to merge you into other companies. Generally, when companies have similar tech stacks, that becomes easier. So they're probably checking that out for consideration. On the IP side, or the intellectual property, any sort of patents, copyrights, trademarks, applications, anything at all regarding any intellectual property, be sure and provide or collect any related documentation and have that ready to go. Last thing, anything to do with NDAs being signed by anybody regarding your IP or your tech, start collecting them. Make sure that they're in a folder in the data room. And this will, of course, include anybody from employees, contractors, vendors, previous investors, etc. Get all those NDAs that have been signed together and make sure that they're in the data room. Category number 8, sales and marketing. For sales, you'll likely have already provided most of this, what an investor is looking for from the finance category we reviewed earlier. But as a quick reminder, your sales revenue sliced and diced in any way that you look at it to both measure and understand your business. You're going to want to get those together and provide those. For both sales and marketing, you really want to diagram out the client journey. From the first time a client ever hears about your organization, all the way to the end of the client journey where maybe the client terminates your service, you are going to want to outline and draw a diagram from cradle to grave and every touch point that marketing and sales has in this process. You're also going to want to provide context to each of those steps of the client journey on why you are doing it, and if you have KPIs to support that stage of the client journey, whether it is the waterfall or the drop off through the sales process, or maybe KPIs and touch points from the marketing process. Any KPIs or any context that you can provide to your client journey, definitely include that on one sheet that is a nice overview of your client journey. Again, a good investor is definitely going to ask you that question. Okay, only 2 more categories left. Category number 9 is management and staffing. I know I've said it a lot. This part's already going to be included in your pitch deck if you've done a really nice pitch deck, but bios of all of your execs and all of your key management who plays a large role in the company, make sure that you have those ready. An investor is definitely going to want to know who's on the team, what their background is, and what their capabilities are. For everybody else, make sure you have a detailed org chart ready to go so that they understand the big picture of how much staff there is and where they sit in the org chart. In the event that you have open positions, maybe they're backfills, maybe they're positions that you've got budgeted for but haven't made the hire yet, make sure there's a blank spot on that org chart so that they understand how many people should be in, say, that given department, and make sure they understand how many people are being budgeted for. Some investors are also going to request a copy of payroll for the past 3 years to support the actual size of the organization as a trend. So don't be surprised if you're going to ask for that. I'd also expect to be asked for all employee agreements that have been signed to date. So all of the agreements, past and present, that have been signed by employees, start collecting those and make sure that those are in a folder in some sort of data room. And you also might as well, while you're doing it, provide a general outline of all the benefits that any given staff would receive when they work for your organization. All right, last category, facilities and equipment. Facilities and equipment is pretty easy. It's just an overview of the facilities that you have. This would include maybe a description of your office, a description of your warehouse, square footage, what you're using it for, and of course, any costs associated with carrying those, regardless of if they are leased or owned. So any sort of information on facilities and equipment. So there we have it, an overview of everything that you can expect an investor to ask during the due diligence process. I hope this video gave you something to think about, and if you found it insightful, you should check out my ebook. I put the link in the description below. It covers the first 10 things I would address when helping an organization guide through or plan for a growth phase in their startup. Lastly, if there's anything else that you have been asked for during due diligence process with an investor in your experience, I'd love to hear about it. I'd love to talk about it in the comments below. So be sure and drop a comment if you can. Thanks again for watching.